Hi, Ken Boy with Accounting Accidentally. This video is called Christmas Lights, Target Shoppers, and Sales Mix. So let's start off and talk about Target earnings. From the Wall Street Journal, Target shares tumble on earnings miss. Retailer says spending remains sluggish for apparel, TVs, and home goods. I just put up my Christmas tree and I record this. It's late November, near Thanksgiving. Many retailers like Target depend on higher sales during the crucial period from Thanksgiving to the end of the year during the holiday season. And Target is struggling a bit. So the question is why? Price cuts aren't increasing sales. As the Wall Street Journal explains, Target sales fell 21% after the retailer posted disappointing quarterly earning results and lowered its profit and sales goals for the year. So what's been happening? Target's been pushing their own private label brands and cutting prices on everyday goods, but the formula hasn't worked. The company's sales have been shrinking or flat for the past 2 years. So if you've gone to Target, and we've got a lot of stuff at home that's private label from Target, that normally sells pretty well. But in spite of pushing those brands and cutting prices on other things, which people want to see in an economy where there's some level of inflation, that's still not working. More specifically to the last paragraph, price cuts have helped draw in more shoppers, but those shoppers are spending less both in stores and online. So if a price cut, probably something that's advertised, gets you into Target, the average customer is not spending more once they get there. In consumer surveys, the number one thing we hear is the importance of value and affordability. People are simply being more careful about what they buy. So what's the solution to get out of this problem? Well, it may be sales mix, because sales mix allows you to earn more on each dollar of sales. So first of all, let's define it. This is from my book, Cost Accounting for Dummies, second edition. Sales mix is the relative proportion in which a company's products are sold. Simple example, most companies sell more than one type of the same product or multiple types of completely different products. So let's say you sell shirts, 40% are long sleeve, 60% are short sleeve. Your sales mix is 40% long sleeve, 60% short sleeve. A company like Target sells thousands of individual items. So the mix is even more complex. Now, here's what's great about profit margin. Each item has a different profit margin that Target sells. Profit margin is defined as net income divided by sales. Profit margin is a great tool to compare profitability regardless of the sale price. It's an apples to apples comparison of profitability. So let's look at a simple example. Let's look at lawnmowers and hammers. I've used this example for years in writing. So let's say that Target sells the sturdy lawnmower for $300 price, $45 net income. That's the profit that it generates. The profit margin is 45 net income divided by 300 sales price, 15% profit margin. They also sell a higher end hammer with a claw grip. For $12, they make $2.40 net income. Again, profit margin is $2.40 net income divided by $12 sale price. It's a 20% profit margin. So what's happening here is that the hammer, which is a much lower retail price, generates a higher profit for every dollar of sales than the lawnmower does. The lawnmower is $300, the hammer's $12. So restated at the bottom of the page, hammers sell at a lower price, but they generate more profit. So one thing Target could do would be to change the sales mix to increase the profit on each dollar of sales, so that even though total sales are lower, overall profit is higher. So there is a mix that's going on, and you can change the sales mix by changing how you advertise, promote, how you bundle products together to get people's attention. So this is a possible solution for Target. So the takeaway here is, if you're struggling to increase sales, one way to increase total profitability is to change your sales mix to increase the profit you make on each dollar of sales, to get more out of each dollar of sales if you can't grow sales.